Mark Draper with Andrew Clifford, Chief Investment Officer from Platinum Asset Management. Today we're talking about Platinum's early call of cheap oil and gas in the US, which they saw coming many years ago. You've now played it profitably. Can you tell us a little bit more about that investment theme of cheap energy out of the US, and also how you've actually made money for Platinum fund investors?
Okay, so the main way that we've played that is really by investing in companies that are beneficiaries of the capital spending that will arise from cheaper oil and gas. So, what you see, for example, is that particularly in the case of the gas price in the US, which is at the range of $2.50 to $3.50 is a fraction of international gas prices. That gives.
And where's that come down from? Just to put that.
It typically was probably prior to all of the sort of these new gas resources was more of the range of $8 to $12. And whereas in the rest of the world it's really oil linked, which puts it more up around the 16 mark typically. But there's a lot of industries that use gas and that clearly have a strong advantage as a result. So in the petrochemical area, for example, and so really, what we still see, and it's still on its way, is a big increase in investment in that area, but also just the energy infrastructure. So if we have lower gas prices, or we've got oil. Another example is oil coming from different locations, so we need new pipelines. We're reversing pipelines because the flow of oil has changed in direction within the US. So a lot of investment around this area, and so one way of playing it has been through the engineering construction companies, one of which, Jacobs Engineering, has done very well for us. But we also have investments in Foster Wheeler and KBR. And those companies are yet to really see that they're more involved in the bigger projects, and they're also international companies. But nevertheless, we think they'll benefit nicely from the spending that is yet to really be seen.
And I think it's interesting that you're playing it through that rather than owning the gas producers. So, what's your reasoning for that?
Look, the gas producers have been. Well, what's happened to them is they put this investment in, they've got the gas, but unfortunately, they've suppressed the gas price themselves. Now, we have looked at this in some detail and tried to say, well, at some point, what is going to happen is, and we're seeing the approvals come through now, North America will become an LNG exporter, and the gas price ultimately will rise to international levels, but of course you need that infrastructure. So that's at least a sort of 5, 7, 8 year sort of time frame.
Right.
So we have looked at it, but the problem is for these gas producers is they've sunk their money in, they've suppressed the gas price, and even if we get a little bit of tightness in the gas market, and these resources do deplete quite quickly, so the production from one of these wells in year 1, in year 2 it's typically falls by 50%. So even though the supply is up a lot, if you stop drilling new holes, and the production will start to come off quite quickly. But even then, as soon as the gas price gets up to $4, you will have a whole raft of new drilling and fracking going on. So it's a difficult game. And we haven't yet quite found the company that we want. And clearly in this industry there's a lot of what we'd refer to as Wall Street behaviour, lots of money being, enthusiasm around the idea of money being raised and more assets being bought, and it is one of those sort of, for want of a better word, sort of pyramid sort of schemes around some of these companies. So they're not the highest quality investments. So we've really looked for sort of derivative plays.
Right.
And another area which has, the oil service companies. So we have a position in Baker Hughes, it's a global oil services business, and there's a lot going on there other than the North American scene, but clearly that's a key business for them as well. And because the gas price has fallen, the activity's held up because what's happened is that activity's moved to the oil side of the equation. But there was a boom in the drilling and the fracking of these reserves, and that has subsided. Business is not quite as good, and those stocks have, in their North American businesses, had a bit of a setback, but but that will come again. And of course, we're now talking about this happening in other parts of the world as well. So we think that there's a fairly interesting story in those oil service businesses as well.
And finally, on that, just to round out the theme, what was it that you saw that alerted you to this investment theme many years ago now?
Look, I think that we just have our team of 29 people, and I think that's the whole purpose of having a group of experts, people with their expertise and focused on one area. You should become aware of these things as the trend's starting to rise, hopefully.
And you've certainly made some money out of it. The Platinum International Fund and Platinum Asia Fund have both had sensational years, so congratulations on that, and thanks for your time, Andrew.
Okay, thank you.